Welcome back to Crypto Meets AI. Gary here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. Now let's get into this. We're sitting at $3.01, trading within a range of $2.99 to $3.05. We're down about 1% on the hour. We did break below the $3 mark. We could push a little bit lower. And if history even rhymes, when Bitcoin and ETH got their first spot ETF, Bitcoin dropped all the way down to 40K, and Ethereum had seen its biggest one-day drop in like a year. So we'll see where we go from here, but it does seem like history is repeating, and we're going to have the same type of effect with XRP ETF. Academia confirms what Wall Street fears. The International Journal of Economics, Commerce and Management, UK, has officially highlighted XRP as a successful case of blockchain integration with legacy finance. When global academics are documenting XRP's role in bridging old rails with the new, it means one thing. History is being written. This isn't crypto hype. This is recorded proof that XRP has already achieved what others are still promising. The rails are set. Recognition has begun. The people will ignore it, but the elites will act on it. And yes, of course, the Rex-Osprey XRP ETF directly holds XRP tokens, as it is a spot XRP ETF. Ripple has officially entered Wall Street to change traditional finance. Ripple stepped into the repo market, the hidden engine of global finance. Most people have no clue what repos are. Fewer understand why this changes everything. Repos equal repurchase agreement. Banks and institutions borrow cash overnight using treasuries or bonds as collateral, as they often need quick cash but don't want to sell their treasuries. This keeps markets liquid and lets regulators control interest rates. Now, Ripple is wiring this into blockchain rails. Size of the repo market. U.S. repo market alone, 4 to 5 trillion daily turnover. Global repos, estimated 15 plus trillion. Repos decide whether credit flows, whether markets open in the morning. This is bigger than FX or equities in terms of systemic importance. Who uses it? The Fed, monetary policy op, JP Morgan, BlackRock, and Citadel. Hedge funds rolling positions. Central banks worldwide. If repo breaks, the entire system freezes. That's how critical it is. Enter Ripple. Ripple with DBS Bank plus Franklin Templeton just launched tokenized repo collateral on the XRP ledger using RLUSD. That means repo transactions, the hidden trillions, are about to move on-chain. This isn't crypto adoption. This is financial rewiring. Now let's get into those numbers. If Ripple even captures 1% of the 15 trillion global repo market, that's 150 billion in daily flows. At 5%, that's 750 billion daily. Now imagine those flows require XRP for fees and liquidity bridging. The math writes itself. Institutions can deploy trillions without guardrails. That's why Ripple built XLS 70 verifiable credentials and XLS 80 permission domains to give banks credentialed access to tokenized markets. DNA on-chain extends this identity layer, and XDNA is the fuel behind it. JP Morgan and WEF have quietly been testing digital identity rails for years, not experiments, full-blown pilots. Now those credential systems, Connexus and XLS 70 and 80, are being wired into XRPL, and identity layer goes live. DNA on-chain is that digital identity anchor. Ripple plus the IMF plus the ECB connection. The IMF talks SDR 2.0. The ECB runs tokenization pilots. The WEF documents debt tokenization on XRPL. Now Ripple repos emerge as the reset switch, mechanisms to migrate trillions onto new rails without a public announcement. That's actually genius if you ask me. And here's the geopolitical kicker. BRICS may de-dollarize, but repos are dollar denominated. 80% of collateral is U.S. Treasuries. BRICS is already testing XRP Ledger. If Ripple rails carry dollar repos, then even BRICS liquidity still runs through U.S. aligned tech. And that's checkmate, my friends. The FOMC moves rates. But eventually, it won't matter because real liquidity will price on Ripple's repo rails, not Fed's balance sheets. America's real weapon is RLUSD, Ripple's stablecoin, now entering the repo markets to lock global liquidity onto U.S. rails. The dots are all there. BlackRock, JP Morgan, WEF, Ripple, IMF, identity, and liquidity rails quietly convergent. Comment down below and tell me what you guys think. And if you found this information valuable, helpful, or hell, even entertaining, please share, like, subscribe, and comment down below. And just in, U.S. Treasury's just kicked off stablecoin regs under the Genius Act. This is bullish for XRP. While others scramble, Ripple's RLUSD is already one of the few fully regulated USD stablecoins. The rails are being built and Ripple and XRP is sitting front row. The $25 XRP endgame is set. It's September 2025. The dominoes are aligned. The clock is ticking, and if everything proceeds as planned, XRP will hit $25 plus by December 2025. Let's connect the dots and go down that rabbit hole, my friends. The lawsuit is over. The rails are open. After 5 brutal years, Ripple crushed the SEC. XRP now has the strongest legal clarity in U.S. history. This is why banks, funds, and corporates are finally stepping in. They know it's legally bulletproof. The ETF frenzy. October is key. Nearly 20 spot XRP ETFs are filed. Polymarket odds show 93% likelihood of approval by mid-October. ETFs equals trillions in institutional liquidity unlocked. This is the true Wall Street ignition moment. RLUSD is spreading. Ripple stablecoin RLUSD is live in the US, expanding into Japan Q1 2026 via SBI, backed by US Treasuries and bank deposits, audited monthly. This makes XRP Ledger the settlement backbone for institutions. Ripple becoming a bank. New York banking charter almost done. Fed master account is still pending. When approved, Ripple becomes a sovereign-level bank plugged into the Fed's settlement system. This isn't crypto hype. This is structural power. Legacy finance is plugging in. Franklin Templeton, XRPL tokenized funds, DBS and Ripple plus RLUSD roll out in Asia, and BBVA USD built on Ripple rails. This is how trillion-dollar players are onboarding quietly but irreversibly. The macro backdrop: 35 trillion in U.S. debt, but actually we are close to 37 trillion, I believe. Dollar trust is collapsing. EIS and IMF openly calling for blockchain rails. The U.S. Treasury is testing digital ID plus KYC rails on blockchain, which ledger already has DNA anchoring plus ZK privacy for KYC. XRP, of course. September 2025 marks the calm before the storm. By December, XRP could break above $25 and rewrite financial history. Those who position now will own an asymmetric upside of the century. Comment down below and tell me what you guys think. What is your price prediction for XRP by the end of the year? And now on to some XLM news. MoneyGram will launch a revamped mobile app that will closely utilize Circle's USDC, Crossmint, and Stellar's XLM. The update will be rolled out first in Colombia. Meanwhile, Crossmint partnered with Google to enable agentic finance globally, using Google's agent payments protocol AP2, allowing agents to make purchases with credit cards or stablecoins. It's been a great week for Stellar and stablecoin adoption. Now let's go over the U.S. crypto Q4 2025 regulation timeline. September 9th through the 12th. Democrat senators unveil a market structure framework for digital assets. By September 30th, SEC portion of legislation expected to pass committee. October, Senate Agriculture Committee CFTC oversight drafts language on digital commodities and debates SEC and CFTC jurisdiction. November, committees reconcile jurisdiction issues. Full market structure bill could reach the president's desk before Thanksgiving. Year-end goal, a comprehensive crypto legislation signed into law. Now on to HBAR. HBAR is one of the few DLTs that can truly claim global adoption. Since Hedera began, we've seen utility on the hash graph spread to almost every continent on Earth, whether it's tokenizing RWAs in the West, to payments out in East Asia, all the way to CBDC infrastructure down south in Australia. From day one, this was Lehman and Mansa's goal. It's a large reason why, by definition, Hedera is the most decentralized DLT. The hash graph consists of network nodes that are spread geographically across 6 of 7 continents on Earth, and I'm assuming Antarctica is the only one they're not in. Just about every developed nation in the world has a company or a government body that's tied with Hedera, either directly or through a close third party, from their work in the finance industry spanning across payments and tokenization. We've seen names like International Institute of Finance, Visa, FedNow, Aberdeen, Lloyds, Six, and more. And with regulations now greenlighting institutional use of DLT, Hedera has begun to be seen as a favorite amongst those said institutions. But it's not just finance. We're seeing the convergence of big tech and AI on Hedera too. Some of the names here: NVIDIA, Intel, Palantir, UKCAA, and Accenture, and more. From drone security to hardware-based trust and AI to verifying data from satellites in space, the next frontier of technological innovation is building on Hedera in real time. The hash graph is a layer 1 that was never built around any specific narrative. It was never payments or DeFi or RWAs. It was simply a ledger that worked for whatever real-world purpose you needed it to, all while bringing the highest level of institutional-grade trust through the Hedera Council. There's a reason the big institutions are choosing to build their future on Hedera. And last up, some Zebek news. 45 million Americans own crypto. In 2024, 380 billion in remittances were sent overseas. Both groups face huge fees moving money across borders. Stablecoins change that fast, low cost, frictionless. As Jay Whitehead, SVP at Assure says, by 2026, they're a must have for payroll.
There are 45 million Americans who own Bitcoin, Ether, Dogecoin, decentralized finance assets right now. 75% of them are under 35 years old. So that cohort really likes to have their Bitcoin mixed with their dollars, if you will. And then $380 billion was sent overseas from paychecks in 2024 to just 5 countries by American workers. But those two types of people who own Bitcoin or Ether or Dogecoin, and people who are sending international remittances have to pay very large fees to move those currencies in and out of fiat and or other currencies. And what stablecoin will do is it will eliminate the friction, make those payments immediate, and make them almost free. So stablecoin is really important for those two cohorts in particular. And as a result, payroll providers like Assure really need to consider stablecoin a must-have for 2026.
I do have to admit, stablecoins are the future. I guarantee stablecoin issuers will be the largest holders of U.S. Treasuries in the future. Well, that's what I have for you, folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.